Hello everyone, this is Jordan and this video is being produced on Saturday evening, February 13th. And we want to take a look at one of the main concepts from our book and kind of apply it today and answer the question, why is gold suddenly performing so well? Now, the driving force for gold is negative real interest rates or declining real interest rates. And you can see in this chart I highlighted three of the worst bear markets in gold. And obviously, if the driving force is negative real rates or declining real rates, the driving force for a bear market in gold is when real interest rates are going higher, and they don't have to be even positive. They can just be going from negative to 0 or minus 6% to minus 1%. Even in that case, that's negative for gold. And that's what happened in the mid 1970s. And I show here on the chart the real Fed funds rate. That is the middle plot, and the one at the bottom is the real 5-year yield. And another one to look at is the real 2-year yield. But so here again, we have in the middle the real Fed funds rate and the real 5-year yield at the bottom. And we can see in the mid 70s, look how the real Fed funds rate went from about minus 5% to almost 0. And then the bull market back then ended when the real Fed funds rate went from minus 5% to plus 9% very quickly. And so the bear market that we've recently had in that regard has been similar to the one we had in the mid 70s. And I pointed this out in one of the last chapters in my book, because you could see that the real interest rates were negative and they basically went to 0 or so. If you look at the real Fed funds rate, that went from almost minus 4% to barely positive in late 14, early 15. And if you look at the real 5-year yield, that went from about minus 3% to plus 2%. But look what's been happening over the last year or so, where if you look at real rates, they kind of peaked. I can't zoom in, but it looks like they peaked about a year ago, and so they've been declining. And now the real Fed funds rate as of December, I mean, the inflation data, it's takes a while for it to come in, but the real Fed funds rate is back to negative, and you can look at the real 5-year yield. That was at 2% when it peaked in early 2015. It's at 1% as of the last reading. So real interest rates are declining, and that's good for gold. And if we just look what's happening in the last month or two, you don't even need to wait. We don't even need to wait for the inflation data. We see that bond yields, another word for interest rates, are plunging. And that's good for gold as long as inflation is not plunging faster. So even if inflation is 0 or 1% and stable in that area, if bond yields are plunging faster, which they've been doing, real interest rates are therefore declining, and that's bullish for precious metals and gold specifically. But again, so bond yields have been plunging, and obviously we know there's slow growth in the U.S., there's risk of a recession coming, and now there's talk of negative interest rates in the U.S., and so that is the real fundamental driving force for gold, and that just explains what's been happening in the last couple months. And again, I mean, this is a simple concept, but it's very powerful. And a lot of people they play the manipulation card, which I really dislike that, because I think it's intellectually lazy, and I think it's an excuse for losing money. And you can see here, this is why gold went down from 1900 to 1050. It wasn't manipulation. It was the fact that real interest rates increased, making gold a less desirable asset to hold. The real Fed funds rate went from minus 4% to slightly positive. So the fundamentals for gold got worse, and gold had a really, really big run for 10 years, and that's why it had to have a bear market. And that what happened there with real interest rates, that gave it the excuse to have the bear market. So, to conclude, real interest rates are the driving force for gold. And so you have to focus on what's going on with inflation, but also interest rates slash bond yields, because those are the two things that determine real interest rates. Thank you all for watching this video, and if you want to get a copy of my book, you can get it at thedailygold.com/book. Thanks for listening and watching, everybody.